What if I told you that Wall Street may be completely underestimating AMD? For years, investors viewed AMD as a CPU company competing against Intel. But today, that narrative is changing fast. According to recent analyst reports, AMD could be on the verge of becoming the second major AI chip powerhouse behind Nvidia. And some analysts now believe AMD's AI business alone could generate tens of billions of dollars in annual revenue over the next few years. The biggest catalyst came from a major Wall Street upgrade. CD recently upgraded AMD from neutral to buy and raised its price target to $575 per share. The reason? Analysts believe investors are still valuing AMD primarily as a CPU company while ignoring the massive opportunity developing in AI GPUs. CD even described AMD as a legitimate second source in the AI GPU market, a market that Nvidia has dominated for years. Now let's talk about the news that could change everything. AMD and Meta have expanded their strategic partnership to deploy custom AMD Instinct AI GPUs and EPYC CPUs across Meta's AI infrastructure. The deal involves deployments scaling up to 6 gigawatts of computing power over multiple years, making it one of the largest AI infrastructure agreements ever announced. Initial deployments are expected to begin in the second half of 2026. Why does this matter? Because Meta is one of the largest AI spenders on the planet. Mark Zuckerberg is investing aggressively to build next-generation AI systems, and AMD is becoming one of the key hardware suppliers behind that vision. If AMD successfully executes, analysts believe the company's AI revenue could reach approximately $33 billion in 2027 and over $50 billion by 2028. And that's only part of the story. AMD's data center business continues to gain momentum. The company's EPYC server processors are taking market share, and its upcoming Venice CPUs are expected to deliver significant performance improvements. Wall Street is increasingly viewing AMD as a company positioned to benefit from both the CPU and GPU sides of the AI revolution. Meanwhile, AMD is building something Nvidia investors should pay attention to: a full AI ecosystem. The company now offers CPUs, GPUs, adaptive computing solutions, networking technologies, and software designed for large-scale AI deployments. That broad portfolio could make AMD one of the few companies capable of delivering complete AI infrastructure solutions. But investors should also understand the risks. Nvidia remains the dominant force in AI chips. It still has the strongest software ecosystem, massive customer relationships, and a substantial lead in AI acceleration. AMD is growing rapidly, but it still has to prove it can compete consistently at Nvidia's scale. There's also a valuation risk. AMD's stock has already surged as investors price in future AI growth. If AI spending slows or execution disappoints, the stock could experience significant volatility. Even bullish analysts acknowledge that expectations are becoming increasingly ambitious. So what's the bottom line? AMD is no longer just a CPU company. The company is rapidly transforming into a full-scale AI infrastructure provider. With a massive Meta partnership, growing AI GPU demand, expanding data center market share, and multiple Wall Street firms raising targets, AMD has become one of the most important AI stocks to watch over the next several years. The question investors need to ask is simple: can AMD become the true number 2 player in AI behind Nvidia? If the answer is yes, today's valuation may only be the beginning. Let me know in the comments, do you think AMD can reach $575 or even $1,000 during the AI boom?